my name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited. And here is your daily technical analysis of foreign exchange markets. I'll start with the euro against the dollar. A second bullish white soldier yesterday, for sure, but really it was an indecisive spinning top with a long tongue and tail that saw the top capped by what had been a fairly innocuous congestion level at the March 2018 low at 121.52. It was nevertheless still, in part at least, a type of continuation of the reactionary move back up from last Friday's strong key reversal down. Below we still have the combined support of the old neckline of the January to February reverse head and shoulders pattern, currently at 120.78, and the rising short medium moving average, currently 120.84. This was the first halt to the recent decline prompted by the shooting star pattern type 1 bearish that we saw last week. A little below we have the flatlining medium moving average, currently 120.40. Now I'm always suspicious of flatlining moving averages as they tend to have a greater potency. So far today, a slightly higher open, but it seems your actually move back up is now becoming spent as the market contemplates trying lower again, or so it looks right now. Cable, aka sterling against the US dollar. A really interesting piece of action yesterday. You see, on the surface it was a clear key reversal down and third bearish black crow. However, if you've heard my earlier video commentaries, you would realize that this market had become trapped within a band roughly between support at 140.75 and resistance at 142.43, with the 141.43 support resistance number mixing in there as well. This is the trio of original resistances I pointed out many months ago: 140.75, 141.43 and 142.43. Anyway, despite the dip below the 140.75 level, and even with a key reversal down, which by the way wasn't that hard to do as the previous session was only a small hammer, despite all this the market closed still over the key 140.75 area. That is why I'm adding a huge dose of caution to this otherwise superficially good key reversal down done yesterday. Now, why did prices close so relatively high yesterday? There's the question. Well, I think I can answer that. I've said for a while now that below we have another trio, a dynamic trio this time, changing each day, of support made up from the rising short medium moving average, currently 140.01, the rising medium moving average, currently 139.36, and most importantly, in between them currently, the lower time, currently at 139.72 of the special June to September 2020 bullish shift pitchfork. This is the pitchfork that has given the bullish angle of attack of this market since September of last year. This trio of dynamic supports have been making their way up in this market, and they are now about to enter the frame. So far today, a pull back up away from the 140.75 support, but not strong enough to test the overhead 141.43 congestion level just yet. Euro sterling. A second bullish white soldier yesterday. Now on its own, not that remarkable, but the result of the action was to cause me to realign higher the downtrend, currently 86.31, that makes up the second part of the recent possible roof or half diamond pattern, thus making it sit closer now to both the paralleling declining medium moving average, currently at 86.38, and the gently rising short medium moving average, currently 86.29. As a result, perhaps, just perhaps, making it a stronger resistance. We'll have to see. Meanwhile, below we still have the support from the extension of the flat trend line from the March base descending triangle at 85.45. Now, going back to this, I've spoken for a while now about this roof pattern, sometimes known as a half diamond, for the action from the start of May until today. So, taking this further, with a possible target X as a downside target for this roof stroke half diamond pattern in the 85.25 area. I also could put a preliminary target on the upside, as these patterns can break in both directions. However, we have not as yet had a confirmed break up and out of the downtrend for the roof. Yet, I can give an idea of the size of the break should it happen. When it happens, it would be in the order of 55 ticks on top of the break of the realigned trend line, down the realigned downtrend. If that happened today, it would be in the 86 area, even though I have not marked it on the daily chart. So far today, a seeming reactionary move lower, probably the flatlining short moving average currently 86.05 may have something to do with it. You see, I suspect flatlining moving averages, as I've mentioned already, may be more potent even on such a thing as a short moving average. Interestingly, right now we're looking like a bearish harami for today. US dollar against the Indian rupee. A bullish white soldier yesterday, and an interesting one as well, as it was the first close over the top side resistance of the flatlining medium moving average, currently 73.29. The medium moving average has successfully capped the market 2 weeks ago, so it is an important move higher. Not only that, but as I've repeatedly said, flatlining moving averages, I believe, tend to be more, well, to have more potency as resistance and as support. We now have overhead the flatlining long moving average, currently at 73.46, and the flatlining short medium moving average, currently 73.69 if that wasn't enough, which is lodged within a Fibonacci congestion zone between 73.62 and 73.69, and includes actually the 50% Fibonacci on the September 2019 to April 2020 move at 73.68. Now, as a further interesting bullish counter, I mentioned 2 weeks ago a pullback up from the big fall between April to May. That could see a move as high as 74.40 and still keep the bearish incentive. However, there's a lot in the way, as I've already mentioned, between there and here. So far today, a slightly lower open and dip down to test once again the medium moving average, but this time from above before a pullback up. The market is cautious ahead of the long moving average overhead. US dollar against the Brazilian real. A second bearish black crow yesterday and a follow-on lower to the previous session's reactionary combined bearish harami and bearish double pattern. This is further evidence that the recent build-up from last week's daily key reversal up for a move higher has stalled. This relieves the pressure somewhat on target X in the 42.80 area. This is a very provisional and very preliminary target for the whole mid-April today action being a possible bearish halfway hesitation. It also opens a way to look at the action of last week up till now as potential for a possible bear flag action, something this market has recently fallen in love with. This potential pattern is encompassed by a number of lesser support levels below at 510.87, 505.73, 501.59, as well as the December 2020 low at 500.93. Now, that last level halted the fall last week. Interestingly, one can now regard the 510.87 level as resistance, and the 505.73, well, probably as resistance. Overhead, well, we're in fairly free territory with only the declining short moving average at 515.39 and lesser Fibonacci levels at 520 and 525.67 as resistance, though we do have some early May based congestion between 521 and 3/4 and 523 and 3/4. US dollar against the Mexican peso. You can look at yesterday's action in different ways. Yes, it was a third bullish white soldier yesterday and a better follow-on higher to Friday's key reversal up than what we saw on Monday. However, the candle had a long tongue and tail, but the tongue rose up to approach the overhead flatlining medium moving average, currently at 20.22.28, before stalling and pulling back down to nevertheless still close over the combination of February to April head and shoulders top neckline, currently at 19.98.81, and the short medium moving average, currently 19.97.24. I actually suspect the short medium moving average was the more potent. Ultimately, what we ended up with was a long-legged indecisive spinning top. Cap was the same as 2 weeks ago, and though the close was strong, it was nowhere as strong as the one 2 weeks ago. Below we have some congestion in the 1988.60 and 1985 even areas, though to be honest this hasn't shown up in recent days. Key support actually below is the 1971-68 area. So far today, either side of yesterday's close, with a slightly higher open, but now testing down to the neckline and short medium moving average. Just below that we have the flatlining short moving average, currently at 1989.40, the base of yesterday's actions indeed. Please just be cautious about flatlining moving averages. I've already mentioned it. Whenever the overhead moving average, or it's the overhead medium moving average, or the short moving average below, be just careful about them. I suspect their potency tends to be stronger than angled moving averages. Thank you for listening. This short version broadcast gives essential market patterns and consequences. Please be aware of the risk disclaimer posted with this broadcast. Copyright is Tofpik and ADM Investor Services International Limited. And here comes the final bit.